I am about to introduce our next introduction, but first I have to ask a question. And I will tell you up front, I was incredibly skeptical about having this conference here on campus. I was skeptical of the logistics, of the parking, of getting people here. Do you like being here? I was so wrong about that. So it's really good to know that you like being here, and we've had a beautiful day. The brief bit of gratitude that I would like to speak to you about today is about someone who is actually not here. But if you've been to other conferences, you know that Steve Witkoff was the chair of our advisory board, and he's a frequent moderator or guest on the panels here. And Steve has moved to Miami. He's become much busier in Miami, but he has stepped down as the chair of our advisory board, and Randy Weisberg from Atlantic Pacific has taken his place. And I was hoping that Steve would be here so that I could give him things that he'd have to schlep home. But he is not here, so we're going to thank him virtually. If you would bring up, there's the slide of Steve and his favorite picture of himself, and the standard vase that says, thank you so much for all of the things you have done for us. And now that he's working in Miami full-time, we figure he needs the wine. So if you're local, Junior at Crown Liquors picked out 3 of the best bottles he could pick out for Steve to enjoy in his downtime. So thank you in absentia to Steve, and he'll see the tape of this. So thank you very much. Now it is my pleasure to introduce an alum, not only of the University of Miami, but of one of my classes, and he will talk to you about the next panel. So this is Roger Morales. Thanks, Roger.
Thank you. Thanks, Andrea, and thanks for the opportunity to speak to you here, or at least to introduce the panel. Also, thanks to Steve Witkoff for everything that he does for the school. By way of background, I'm Roger Morales. I'm a partner at KKR, which is one of the big global alternatives investment managers. My responsibilities there are to jointly run our equity investment business in the U.S. And by way of background, last year we invested $30 billion of capital in the commercial real estate sector in the U.S. in equity, in credit, and we run an equity and credit vertical. Anyways, as I was reading the script, it's, the line says it wasn't long ago that I was a student here at the University of Miami, which is a total lie. Because it's now been 22 years, and so it's not, it's been a long time. Having said that, today's my first time on campus in 18 years, and I'm reminded of everything that I took for granted when I was at the University of Miami, being a local Miami person, and urge all of the students here not to make the same mistake. You are as close to heaven as you can be without knowing it. And in warm temperatures, so don't take it for granted. When I was here, there were no specific commercial real estate classes, and I'm undoubtedly impressed with the strides that the university has made in building up its academic efforts in this sector, hence we're all here. And earlier, we saw how many students are in the audience, and Andrea's asked me to please raise your hands if you're an alumni of the university and have taken some of the real estate offerings here. All right, applause. Okay, on to business, because I'm not the main event. On the next panel focuses on Miami's place in the global real estate markets. Before I leave the University of Miami, I have to say that the way the campus looks is so impressive compared to when I was here in school, like I said, 22 years ago. And that improvement is due in large part to the efforts of the moderator of this international panel. Bernardo Fort-Brescia is a co-founder of Arquitectonica, an award-winning architecture, landscape, and design firm that has made an impact on space throughout the world, literally. Bernardo is joined by Sonny Kalsi as co-CEO of BentallGreenOak. Sonny's team has $74 billion in AUM around the globe. Prior to founding GreenOak, Sonny ran the real estate business at Morgan Stanley, and he has particular expertise in all of the Asian markets, and without a doubt, one of the best global perspectives that I've ever seen. The third panel member is Marcelo Kingston, managing partner of Multiplan Real Estate. Multiplan is a developer of sustainable luxury products in the U.S. And is an offshoot of one of the largest publicly traded companies in real estate in Latin America. So suffice to say that our experts cover the globe. They're interdisciplinary and insanely accomplished, and we're lucky, really lucky to have them here. I'm going to start the questions here for the panel as follows. A few weeks ago, we were all excited by the Financial Times headline that read, quote, "Miami is the most important city in the world right now." Wait a minute. I think we're supposed to have the panelists join, right? What were you guys waiting for?
I'm waiting for you to tell. You want the middle? It's supposed to be somewhere here.
All right, folks, these are the panelists. Quote, guys, "Miami is the most important city in the world right now," end quote. But when we read the Financial Times article, we found that the title was very tongue-in-cheek and that the content was sometimes less than flattering. So I ask you, is Miami the most important city in the world? And if not, what will it take to make it so?
I guess I'm
Well,
burdened
thank you
with
to
this question.
Roger.
Yeah. Actually, it's maybe the most important city in the world for different reasons than the article wrote. Because places become what they are because of the people that move there, because of the people that live in the place. It's not just about the weather or the taxes or the other reasons that we hear. Is people like it, and the people, I think, are attracted to the other people that are here, and I think the demographic change that we're seeing and that we have seen in the last couple of years, and one could even carry it to the last 5 years actually, are the main reason why people are moving here. So maybe the description in that article was maybe interesting historically, but maybe it's not current. And what current is in the article is some of the rising property values, the amount of investment that is coming here, the people from the tech and financial world that are moving here. That is the part that is accurate. Some of the description of the city as a place that is shallow is no longer valid. It's no longer correct. I think he does miss the mark on that. Well, the difference is that he may be our journalist, and therefore he hasn't lived here and seen the actual transformation like I have. I lived here for 40 years. I came here straight from school. So I have seen, and I can tell the difference. And I think that's where some outside observer may not realize because there's no historical perspective.
I think Bernardo, and I moved here 5 years ago, coming out of Chicago, and when the perception out of Miami was pretty bad. It felt almost as I was going back to Brazil. I mean, the farthest that you would go to the West is still to feel in the West as this lost place geography within the larger U.S. And the DNA that we see here was already there. When I arrived in this town, I mean, the tax incentives, the great vibrant city, and the capital, because it was always been a Latin hub, and that capital was always available here. But I think the people was the most astonishing factor. I mean, similar to my profile, I mean, pursued higher education here, having successful careers across the board, but we just got tired of the frustration of living in those economies that struggle to perform, and we all moved here all together to really try to create and develop this community. And I think COVID was a catalyst for that. You have that great product and great marketers, all those top influencers, Major Suarez being one of them, and the more the story gets repeated, and I think the article is one of many that has been distributed, and that story that gets repeated and repeated became that mantra. And I think when the article says about The Miami momentum is almost just the FOMO Miami, right? Everyone fear of missing out Miami, so everyone needs a chunk of it. And everyone needs to be exposed to that, to all different levels and all different industries. And I think it's go beyond, I mean, that stereotype that Miami becoming this a new city. It's just like coming to the fruition, all that has been seeded in the previous years.
Well, I moved to Miami a little bit over a year and a half ago, and if anyone here is with the New York State Tax Authority, or you know anyone, I definitively moved here. So, and I would say some of the reasons that I moved here are probably some of the things that are driving some of what that article talked about. But if you take a step back, I think there are two things going on globally, but certainly in the U.S. right now. You've got huge demographic change, and it's accelerated. COVID accelerated it, and we're seeing a demographic shift in the U.S. that we haven't seen since World War II. And Miami is a big Florida is a big beneficiary of that. South Florida is a big beneficiary of that. And then we have technological disruption, which is disrupting everything, including real estate. I met a young man in here earlier, a prop tech company. I basically, I applaud him. And, I think that in Miami is somewhat getting the benefit of that. I think that there's more upside and opportunity for Miami to benefit from that. So, look, it's a complex place, right? I came here over the last, I'm in my mid-50s now. But I came here a long time ago to come here and have fun. And you can still have fun here. You can still go to Ultra in a few weeks if you want to. I've been invited to Ultra. I said, I can go for 1 day. If I go for 3 days, I'll be the 4th day in the hospital. So, but you can also be super healthy and super fit. And I saw somewhere that Miami is the healthiest city in the country. I read that somewhere recently. So I think that complexity, right, and then the strong Latin culture, everything, I think Miami's a much more complicated, complex place for the better than I think a lot of people realize it is. It's got a lot going for it, right? So in addition to weather, in addition to taxes, in addition to lower regulation, Florida, Texas, Arizona, there are states that are going to be, or have been net winners, or are going to continue to be net winners. Mm-hmm.
Well, this panel is about Miami and the world, and not just Miami, and how Miami attracts or expands its footprint around the world. This is a panel of very different people because we have here someone who purchases buildings that exist all over the world, not just Miami. He just happens to have moved here, but his footprint is global.
Correct.
We have here Marcelo, whose company came to Miami, 25 years ago?
About that.
In the early days of the first wave of transformation. Every city goes through waves, and only came back 3 years ago, or
six years ago,
recently.
Yeah.
There's a period, 20 years, that they were not here, and they have rediscovered and are investing and developing, but they're on the development side. My world is one of the future because I'm an architect and I get the call for something that will be finished 3 or 4 years later. So I actually have the benefit of being the real estate psychiatrist. I'm saying I hear that. I get the first call when somebody wants to build something. What can I build? What can I put up? It is, so I have more of the future side than he who buys what's already in yielding, and he who has to, who's building for the moment and for the market.
Right.
And so but connecting us to the world, we had a bunch of questions that all of you sent us. So I'm going to use some of them because there are way too many, okay? But the first one that stood out is, how are the major real estate markets recovering in comparison amongst Miami's peer group of global cities? How do we compare, and you probably have a very good perspective of what's happening in the world in comparison to what's happening here.
Right. So I'm going to first say my answer is as of last week. just because I think, given what's going on this week, it's going to say I'm going to ignore it for now. All right, so
Yeah, let's assume.
up until last week. So I think some of it is in line with the comment I made about demographics. So if you look at the U.S., the two cities you could argue that got hit the hardest by COVID, from almost every perspective, were New York and San Francisco. And they've been the two cities that have been the slowest to recover from COVID. I would say New York's case because we got hit so hard from a health perspective. And, you know, if you're a New Yorker in this room, you know what I'm talking about. You know, the psychological impact that had. And then San Francisco, I said candidly, because I think the tech firms are in a position to offer their employees the most flexibility. And so those two cities have taken the longest to recover. They've got, you know, there's been a huge uptick in, for lack of a better term, people not feeling safe. They've got political challenges. In New York's case, I think it's getting addressed with the new mayor. And so they've definitely been net losers, you know, as it relates to what's happened from a COVID perspective. Some of the rest of the world, it's interesting. You know, the way we kind of think about things as an investor, broadly speaking, is we look at, we're thematic in terms of what we do. So 50% of what we're doing everywhere around the world right now is industrial. And in that case, we'll build. Industrial is really the only category where we will build. We've got some partners in the room here, and we're doing a lot together with them. And that's a theme that we think is interesting here. We think that's a theme that's interesting in Europe. And it's interesting in Asia. Why? Very simple. Jeff Bezos has said in an interview that he thinks COVID has accelerated everything by 30 years. Now, I think he's a little bit prone to hyperbole, but even if it's 5 or 10 years, what's happened is internet sales, online sales, have gone from 10% of sales to 20% of sales in the U.S. in the last 5 years, and most of that's been in the last 2 years. Europe, depending on the country, has gone from 5% to 10%, 10% to 20%, similar numbers in Asia. What that does in terms of what that means to real estate, what that means to retail on the negative side, what it means to industrial logistics distribution on the positive side, has been groundbreaking, and I think is not just stopping now. Those are long-term trends. And then, how does that tie to which places are doing better? The places that can take advantage of that are doing better. The places that can't take advantage of that are not doing better. So with very few exceptions, if you look at the continent right now in Europe, industrial market's doing great. There's not really a multifamily market. It's a little bit more complicated there. But and the office market is really mixed. You know, some places like London's back. London's back to where it was pre-COVID. Some other cities are not. And I think that unevenness in recovery is a little bit driven by what's happening from a demographic perspective in those countries. It's a little bit what's happening from a policy perspective. The way we think about Asia broadly, interestingly, you know, like I say jokingly, COVID hasn't existed in South Florida for 18 months. It's part of the reason I've probably been here. COVID has absolutely existed in much of Asia and has existed very much so in terms of, you know this, Bernardo, with your business over there, with the restrictions and everything else, those economies are actually doing really well. Right? Because people have been able to pivot and figure out how are we going to make money in this environment and how are we going to do it. And look, a lot of this is in certain countries. If you invest in Japan, Tokyo is the cultural, political, financial, media capital of that country, of a country of 125 million people. The United States, you have a half dozen cities vying for every one of those. And so that concentration in some of those places around the world has provided a huge amount of stability in some of those places. So, look, I think what's interesting about the U.S., if I kind of bring it back, a lot of the rest of the world is pretty boring, right? It's pretty stable. You know, we think we're an old country. We've been around, you know, for 230-something years, right? These places around the world have been around forever, right? London's a 1,000-year-old city at least. We've seen a lot less volatility there. We've seen much more change here in the U.S. because it's a massive country. We may not always get along. I grew up in Tennessee, so I can speak from experience. We may not always feel like we get along, but we have a whole lot in common. We have a hell of a lot more in common than most of the Europeans do with each other up until last week. And so people can move. Labor can move. There's a huge amount of fluidity. And so, look, I just think that the question, I got asked this question yesterday at the advisory board thing, do I think the U.S. is going to be a beneficiary of what's going on right now? I think the U.S. has been a beneficiary in COVID. I think U.S. has come out, relatively speaking, ahead. U.S. companies have come out, relatively speaking, ahead. And look, if this conflict in Ukraine spreads out broader than that, then we have bigger issues. If it stops where it is right now, I think it's going to be a net positive for the U.S. as well, as it relates to capital flows and how people feel about it.
I think when I looked at the other side of the world, to Latin America, I think the impact of COVID was pretty significant, was not a beneficiary at all. I think if you look overall, those economies, they don't have the resources to put in place the necessary programs, the welfare programs to protect the vulnerable through a major global crisis. So despite the fact that every 4 years, I mean, those economies do suffer a political crisis, on top of that, you have a global pandemic, just accelerating some trends. So what you see now, and the big question, whether you're going through a repetition or a redemption of what we saw in the past, back in the 2000s when all those left-wing parties took government and ruled a great cycle because it was a totally different world, growing in accelerated pace, and the commodity boom really supported those programs to take effect and grow income in those countries. Now you see the comeback in a much stronger way, even countries that pass it larger from the pink wave, such as Chile, Peru, going through the same cycle, and whether lessons were learned from the past or not is still to be seen. So how are you going to control fiscal policies, monetary policies in an effective way to enable those countries to achieve further development? But the reality is that over the past year, maybe you have an addition, maybe 3% increase in poverty, so you're talking about 20 million people that really went beyond the poverty line. So for the real estate market, there were like severe consequences. For example, our company in Brazil, we had a portfolio mall. For the first time ever, we had to shut down for 6 months, collecting no revenues and trying to protect the business in a way not to totally devastate retail, and how you do that in an effective way. So if the malls were a way to hedge against inflation, now you have to hedge against no occupancy and no traffic, and push that for a long period of time. But the beauty of those economies is that they also reacted quite fast. So we are at pre-COVID levels in the mall industry. I think the challenge becomes on home building. I think when you have such inflationary pressures, I mean, as you see here, but that took effect in those economies much sooner. And in Latin America, you are more a pirate ship, right? You can swing things in a much stronger way. Different than the US, you might be right at transatlantic. You cannot just like pull your levers on interest right off the bat. So in Brazil, for example, you came from a 2% interest rate that was really pushing the economy, coming back from a bad political cycle, and then all of a sudden, less than a year, you're pushing the interest rate to 11%. So that's a devastating impact, especially when for the first time people were accessing mortgages, and the way the mortgages are structured in Brazil. I mean, you purchase your pre-construction, you set your mortgage, it's not a prefixed rate, it's an index rate. And then by the time you close 2 years from that period of time, the balance you adjust as per the inflation. So we have a 30% inflation. At the end of that cycle, you pretty much eroded all the purchasing power that person has, and wages haven't adjusted in that fashion. So what we see, I think Miami again is a net beneficiary of all those movements, economic movements. I think there's a lot of capital flight into Miami once again. You see that also another strong fundamental for that market to be growing the way it is growing is not only the domestic push, but also you start to see these international economies also driving interest, and not only from the consumer standpoint, but also from the corporate standpoint. A lot of new developers, entities, and corporations trying to establish new operations here as a way to hedge against those fluctuations that has been happening, and the concern what's coming next following the next political cycle.
Well, maybe I'll give you my take, because mine is not the present, right? Yeah. Notwithstanding Ukraine, okay, of course, as a week ago, okay. We have offices across the United States and around the world, most continents, all continents. And so I'll give you the overview going, starting here. We went through cycles where other offices were the dominant construction markets. There was a time when Shanghai was, when Dubai was. And today the largest construction site in America is Florida. Tampa, Miami, West Palm Beach, Orlando, Jacksonville included, Naples, name it. This cluster of South Florida is today probably larger construction site than Dubai or Shanghai. And that is something to someday somebody analyze how is that possible, right? Because we're only one state in a huge country. But if a huge country is focused in one place, then you become a big place, right? It is, but there are some winners and losers in these last 2 years. And clearly, as you pointed out, South Florida has been a winner. Some of our clients moved here because they thought they were safer because they could be outdoors and have a terrace and more open air and freshness. And the taxes in their home states did help the decision. It was an all weather, right? And that's what I hear. And then now they liked it in state. And now it's difficult to pull them away. It's, and maybe that's the reason. But we do have other activity in the United States of significance, nothing of the magnitude, but Northern Virginia, maybe because of the Amazon move there. We work in Texas because it may not have the beauty and the weather, but it has the taxes and the jobs. And we have sort of newcomers into that. Denver, for example, where there's a lot of new jobs being created by companies moving there. But in the world, for us, the biggest stable place continues to be China. But when there's a government like that, of course they can pretend or fix. But whichever way, the reality is that they've been beneficiaries of COVID. Chinese used to go shopping in Singapore, in Hong Kong, Macau, whatever, and now they shop internally. They have a gigantic internal market, so they can actually create an economy just within themselves. And our Shanghai office is still busy, and our Hong Kong office is sort of paralyzed. It doesn't have any business in Jakarta or Singapore, because you can't travel. You can't move in and out of Hong Kong. The biggest surprise of this period has been France, by far. But it's a place controlled by one city, so like London, therefore it has the power and a good president and new laws, labor laws and tax laws that are improved. And we're very busy in France. Shocking. We were never expected. Paris, southern France, the tech corridor up in the hills from Nice, resorts like
Bernardo, I think France has been a beneficiary of Brexit. So I think if you think about geopolitical decisions which get taken, you could argue Paris so far has been the single biggest winner.
The biggest winner. They have the train, so you can still go.
Yeah.
And they have the skills. They have people very well trained.
That's a nice place to live, too.
The business schools are taught in English.
Yeah.
So everybody in the business world speaks English. And but he's right, because just like here, it's not just COVID, and it's also taxes, it's also weather. It's also, there is that they have a business-friendly president and Brexit, thank you. Brexit. Like a double hit, right? Yeah. And so they had some advantages in Italy, also northern Italy. It is, and where we had, what is the more difficult is Germany, because there's so many cities, so many small cities. There's no place that you can say is Germany. It's a little bit tougher for a professional like us. But in Warsaw, things were great. Obviously, they're no longer going to be. So that's a change of this week. And another big beneficiary was Dubai. A lot of Europeans, and Eastern Europeans and Western Europeans, those who didn't come to Miami went to Dubai during COVID and bought property. And Dubai is back in a boom, and the tourism industry is amazing. But of course, they have an advantage over the rest of the Middle East. Also Indians, Pakistanis, the rich people from all those countries. But they allow you to drink. They changed the week to a Western week, so it's no longer that their holy day is Friday or whatever, It is just like us, So they modernized completely. Very clever, because that made them a global city. And little details that sometimes help. And, but I think the retail sector in China is the biggest beneficiary because for people who live in small apartments, the mall or going out of the streets in retail is their living room. And if they're not traveling, they're going to go there. And all the big retail companies have expanded away from Hong Kong, away from all these others, in building, leasing in all these retail centers. And we just finished a place, if you ever check it, Hall of the Sun in Shanghai. It's an 8-story mall. The last 4 levels, half of the mall is all food. It's a food hall that is packed that you thought it was the arena in Miami when the Heat is playing. It is because people need to go out and they can stay in their town and in their country. They're not going to go out somewhere else. And they're consuming like never before. It is so, every place has its own nuance and its own angle of where things are happening. On the office side, the biggest winner is the Philippines because of the movement from India into the Philippines for processing.
Call centers.
Call centers is gigantic, millions of square feet that are moving there because they speak American English. Sorry, but I mean, but it is true, and because they were a little bit scared about that bomb, right? So it created a redundancy center. I mean, that's what I see in the new projects on the boards in the company. Nothing compares, no place I've described is as amazing as what's happening in Miami. So imagine, if I took you through the world and I still tell you that Miami is the place, something's happening.
Plus Miami has Ultra, so you got that too.
There you go. Well, what do you think of urbanization? Because this is a subject of suburban versus urban, right? And do you think that 24-hour downtown is coming back? It was the trend, and is that trend maybe slow down a little bit with COVID and suburbanization and being outdoors? Do you think downtowns are coming back to the trend, the direction in which they were going?
Yes, I actually do. I think that, look, let's not discount how difficult the last 2 years have been for everybody. And, you know, it takes human beings 100 days to form a new habit. We've had 700 days of strangeness. But, you know, let's look at the biggest market in the U.S. New York City is the biggest office market, biggest multifamily market in the U.S. The office is not back yet. Well, the office is bifurcated in New York. If you're a Class A office building, our Class A office buildings, we're getting rents 10 or 15% higher than pre-COVID. If we have a Class B office building, we're having a hard time. Our multifamily, highest rents, highest occupancy we've ever had. And the restaurants are packed and everything else. So basically, everyone's moved back into the city. They just don't want to go to the office. Is kind of what's going on. So, but they're happy to go to restaurants. They're happy to go to Ultra. They're happy to do all the other stuff, right?
Yeah,
so,
excuse me.
Yeah.
Right. So,
Yeah.
But to me, the vibrancy of a 24/7 city is created by the residential part of it, right? People go there to work anyways, but do they stay there, right? Do they do the live and play stuff there too? And I think my view is, generally speaking, that it's coming back. Are there going to be some exceptions to that? Sure. Look, I think people talked about the millennials. Everyone gives the millennials a hard time. I love the millennials because they seem to have their priorities better than my generation did or my parents' generation. But people say, well, they're never going to get married and they're never going to have families. They just waited longer, right? And so some of that stuff is happening, and some of that's going to cause a shift to suburbia. It's going to cause a shift to where I want to live, where I want to educate my children. There's going to be another wave of people that come behind them. That's what we're seeing in places like New York, in places like Boston. For sure, Miami has seen that. There's some cities that are, you know, again, if we're talking just about the U.S., look, the Bay Area, San Francisco is a whole unique animal because of just, you know, it's a backward city. The city itself is tiny. The MSA is massive because it's always been a big, Palo Alto and everything else. It's a suburban, effectively reverse urban market. That's one city. So I personally am of that view. I also will have to give you the disclaimer that we own a ton of CBD real estate around the world. So
Yeah.
we hope that that's the case, but that's our view.
I agree. I think you cannot disregard the human nature, right? I think we live in a period that we had to be confined in our own spaces, which help us rethink, how we want to live and what is important, and then quality of life emerged as people trying to find a better equilibrium, but doesn't mean that living in the large city, they cannot find that, because at the end of the day, the work, life, play makes it solves for a lot of issues that all those different demographics are trying to solve. And I think there was a trend to go for larger spaces, but the single family is not going to be the solution to resolve the housing pressures that we have. The larger spaces, you simply, you don't have that availability, to really deploy that kind of inventory to fit that need. So that's a need that will continue to exist, but I think the largest solution for the larger demographic is still the density that you can only find in those places, and where all that vibrant communities can be established.
I also think if you don't have the public transportation infrastructure, that by definition means you got to go up, you can't go out as
Right.
much, right? Unless the jobs move out and where people work go out, which some of that could happen. Look, one of the big questions a lot of us asked early in the cycle was, is this going to be a boom for suburban office? And I've said, people have been talking about suburban office for 30 years, and there's going to be a boom for suburban office. The reality is no one wants to work in suburban office.
Right.
Because you might as well, especially now, you might as well stay at home in your underwear. And do that, right? So I think, look, I think that, and I think one of the biggest issues we have in the United States is we have not caught up. We're not where we need to be from an infrastructure perspective. Bernardo, you see this in Asia. It's Asia's biggest advantage in terms of where they are from an infrastructure
so is Europe.
perspective. And Europe as well. We're not. We got to play a big game of catch up. That's really hard to do with a city that's already built. I should ask the mayor about this next, but it's hard to do in a city that's already built. Everyone loves Austin and Nashville. Have you been to either city recently? By the way, I should have gotten Jason's hat. You sound so much cooler when you got a hat on like that. It's a disaster to get around. It makes going across the MacArthur Causeway seem like no problem. If you're driving around Austin or driving around Nashville, I grew up in Tennessee. It's just, what do you do though after a city's been built? It's very hard to put that in. So I think that Nashville is booming, Austin is booming, but they're going to have to go up more than they can go out.
Right.
Well, let's think about it. People throughout history, they want to go visit a place. They want to go on vacation. And where do they go? London, Paris, New York. The cities that are 24-hour cities. Because even the visitor, the 24-hour cities has a vibe, has a whole life of its own. And I think that, but I'm going to put it from the architect's philosophical perspective, okay? If the infrastructure exists, why not use it?
Right.
If there's all these empty land that already has sidewalks, roads, water, sewer, transit, access from highways, why are we going somewhere else? Why not reuse? You're ahead of the game if you don't have to build infrastructure, if the infrastructure is already there to be taken. And therefore, and what is a fundamental aspect of sustainability? Reuse, adaptive reuse. And reuse is that land that once was a building, was demolished, they did a parking lot, and now can be a building again. It was, that happened in many of the major cities that were scattered with parking lots when the advent of the car and took over, but in reality, that is the logical place where we should be looking to build. And that will make a 24-hour city. And talking about the 24-hour city let's talk about the multifamily aspect, okay? Because I think it would be interesting to talk about it, and then I'm going to address the office. But the multifamily is critical, because what's the point of having a job if you don't have a place where to live, right? And that is a question I get. I'm dealing with some of the big companies moving to Miami, and they ask, and where is our staff going to live if this is the office building you're designing? And therefore, where do you think this is going in the multifamily side for those who are taking a job, not for the ones who are moving to Star Island or Indian Creek, because that is an issue with companies moving here. And we hear of a lot of multifamily being built, and I heard is a fraction of what is necessary if those companies move. But what comes first, the chicken or the egg? What do you all think of this?
I think we're playing catch up now, right? I think now we have this huge demand and need to bring the supply to meet that demand, but it takes time. I mean, this is the nature of the real estate development. You cannot just simply build 300 units the next day. I mean, the panel before trying to address those challenges and trying to shorten the construction cycle and make it more efficient. But the reality is in a large city as Miami, there's a process in place. You cannot find shortcuts for that. So I think it will happen. We will adjust. Yesterday we were meeting and we were talking about that, the pressure that the lack of housing is putting on rents, right? And the escalation of rents. And so far with the minimum, the lowest unemployment levels ever in history, we're achieving almost like full employment. You've been able to pass that through, right, and kind of recompose a little bit of that deficit. But for how long can sustain that, I think, if we don't get that supply, and that's what you see. I mean, the activity that you see in Miami is phenomenal. I mean, you would think that you see too many towers being built at the same place, and who are going to live there? Now you're seeing that there's no place to live, which is sort of like a completely reality shock for whoever was here 5 years ago and couldn't figure out, that landscape of multifamily. And now it's just not enough. Far from being enough. So.
Well, I want to give you some picture of what I'm looking at in this sense, because yes, of course, I agree with you, and I think many people who are looking at the housing crisis are saying it's simply a supply and demand problem. They're saying the rents are going up. Well, it's no different than any commodity of any other kind, right? If there's is a supply and demand, if people build more, maybe the prices will stabilize. But you just brought up the most important question. The most important question nowadays is not if I'm building, what I'm building, but when am I building it? The when is huge because it is dependent on the speed of obtaining entitlements. And when and there are several theorists and analysts of the housing market that say that the difficulty in getting entitlements has caused the housing crisis. And there are places that are realizing that, like San Francisco, and actually encouraging developers. They figured out that, in fact, is that the time it takes and the complexity it takes to get an entitlement to build something is really the biggest obstacle, because for how long are you waiting? And if it takes a year to get a building permit or 9 months, that product is arriving a year later than it should. And that's a year of rent and a year of supply and a year of higher rent.
Right.
So it's, and that is interesting because often those who complain about the rent are the same that oppose new buildings. But it's a sort of a contradiction.
There's unfortunately you don't have to pass a business exam to be a politician, so that's why, right? So, that's the reality is, we'll wait for Mayor Suarez to throw stuff at me, but luckily we have a very pro-business mayor here, so that's a different story. But look, the reality, I think that all of this stuff is interrelated, right? I know KKR does this, we do this, we use a lot of data and kind of thinking about where we're going to invest, and it's all interrelated. We're building a lot of industrial because we see the shift of what's going on from physical to online, but those people have to live somewhere too, right? And so, all of this is interrelated in concentric circles. And for sure, those places, look, Florida, relatively speaking, is a relatively easier place to get entitlements and to get approvals. It has a lot less red tape than a lot of other places, and that will act to its benefit. And by the way, companies see that too, right? If you've got, just given what's going on, we've all seen what's happening with the supply chains, right? If you can go to a place where you can get something built much more quickly, you can get it online, and your tenants can use it, you're going to be highly incentivized to put more capital to work on those places.
And what do you see the trends on the office side?
Office is just, it's going to take a while to figure out. I think because you have You have a bunch of different things going on at the same time. I think there was already a secular trend that was in place to give people more flexibility around work. People just didn't talk about it the same way, right? And so again, if COVID accelerated a lot of things, that acceleration has now gotten to a point where, because of technology, look, I'll tell you how I think about this. I don't want people sitting around an office just for the sake of sitting around an office. I'd like them to be on the road. I'd like them to be seeing our clients. I'd like them seeing our partners, people we do business with. But if they're going to be in the office, I want that to be a high-quality time that they spend together. I think I don't think it's the death of office at all. I actually think people are going to be able to make money in office. I think you're going to be able to, by the way, the best thing you can be doing right now in office is building brand new product. If you can build brand new product in the right place that's ESG friendly, that will lease and you will do well. If you own older stock that is not as well located, that's going to be a tough road. It's going to be a tough road, but maybe, Bernardo, you can help those clients adaptively use that all to be multifamily, right? I mean, so this stuff will get reinvented. People are smart, they're greedy, I think this will get figured out in places where they want to be. In places where they don't want to be, then all that's happened is we've accelerated what would have happened anyways in the next 10 years.
Well, there's a history. Wall Street, office buildings that became lofts.
A lot.
And apartments, industrial buildings and so forth that became residential.
Yep.
I mean, people figure out how to reuse those buildings in some creative way.
Yeah, we do.
Well,
Yeah, it's interesting, just to make just a quick comment. If you look at the condo side, when you look at the demand, what the products demanded out there, the value of a den has really transformed it. I mean, how you sell your product just to allow for the flexibility for someone to work within their house, right? So, which used to be just leftover space, now became like a critical space, even to sell this product as an optionality for that versatility to work at home. So I think those arrangements will take place, to solidify, what is the right model for the right profession, for the right people. But I think it's just like complementary to what we've seen like in the past.
Andrea's coming here to give us the hook. So
Yeah.
you got it.
You guys have given everybody so much to think about, and somebody mentioned the mayor. He is on our last panel, but we do want to give you short 15-minute break to go stretch a little bit and then come back for the last one at 5:15. So if you would please thank these presenters for their
We got the two questions.